Hi everyone, welcome back to your Big Bear November market report. We are heading into the final stretch of this year, and this month's numbers tell a pretty honest story about where the market is, where it's tightening, and where buyers and sellers are still finding opportunity. November brought a mix of slower movement at the entry level, strategic pricing in the mid-tier, and some notable strength in the luxury bracket that absolutely deserves attention. Let's start with the overall feel of the market this month. Days on market continued trending high across Big Bear Lake and Big Bear City, with many homes still sitting longer than sellers would like. Inventory remains elevated compared to the frenzy years ago, but buyers haven't been jumping quickly unless the home is either priced right from day one or has something undeniably special: views, rental potential, standout condition, or a location that beats everything else on the market built in. Several closings this month went 5 to 10% under original list price. Sellers who listened to the market and adjusted early saw stronger traction, while overpriced listings stayed frozen. This is exactly why strategy matters right now. Let's walk through some of the November closings and highlight a few that truly stood out for good reason. One of the most impressive sales this month was 39124 Waterview Drive, which closed at $2,200,000. This property originally hit our market at $2.5 million, and even with the price reduction, it still shows that buyers still pay a premium for a luxury home with the right combination of features. Over 2,800 square foot, 4 bedrooms, 4 bathrooms, and one of the strongest lake adjacent locations available right now. Waterview Drive has always been a competitive street, and this one proved again that well-appointed lake proximity with a solid floor plan still commands attention. In a cautious market, crossing that $2 million mark is notable, and this sale forced that. The upper tier has not collapsed. It's just corrected to realistic pricing. Another standout was 463 Windsong, sold for $1,700,000. This one started at $1.75 million. And the close to list performance tells you the buyers are still stepping up when the product is right. Windsong offered nearly 3,600 square foot, 4 bedroom, 4 bath, and the kind of newer construction. Fox Farm continues to be one of the most stable high-end segments, and this sale reflects that buyers are comfortable writing strong offers in neighborhoods with proven rental return and lifestyle appeal. Right behind that was 1138 Johnny Way, closing at $1,320,000. 5 bedrooms, nearly 3,900 square foot, and located in Fox Farm as well. Johnny Way was one of those sales that's worth paying attention to because it tells a very real story about where buyers are focusing. Large homes with multi-use layouts remain in demand, especially for buyers looking at personal vacation use with STR potential in the background. Even with some negotiation from the $1.4 million list price, this was a strong and healthy close for this segment. Another eye-catching sale was 42848 Eagle Flight, which closed for $1.3 million. Over 4,000 square foot with 4 bedroom, 4 bath, and sitting in the Eagle Mountain area, an area that buyers absolutely love for privacy, space, and custom home feel. Even in the slower season, properties with quality craftsmanship and strong curb appeal continue to find committed buyers. Eagle Flight is a great example of that. And finally, rounding out the luxury standouts, my sale with my buyer Kyle, 42425 Fox Farm Road. We closed at $1,150,000, and this was just over a square foot, 4 bedroom, 4 bath. What made this sale interesting was the negotiation gap from the $1,295,000 list price. It's a reminder that buyers in this bracket are being more analytical, but still willing to close if the home checks the boxes: condition, location, and layout. Fox Farm continues to show resilience even when other parts of the market soften. Those were the heavy hitter sales, but the entry and mid-level market gave us some useful insight too. Homes in the $200,000 to $350,000 range saw the longest days on market, especially smaller cabins or older homes needing updates. Several landed far below the list price. For example, 435 Merino Lane listed at $233,000 and closed at $215,000. 1 bedroom, 456 square foot, cute, adorable, affordable. The buyer pool for Ultra small properties shrinks in the off-season though. 216 West Mojave listed at $299,900 and closed at $270,000. This 3-bedroom, 2-bath, just over 1,200 square foot classic starter inventory. The discount shows exactly what is happening. Buyers are cautious and price sensitive, and they're not afraid to negotiate. 1044 Sierra closed at $285,000 after listing at $299,000. Again, reflecting this 5 to 7% downward push that we're consistently seeing in this tier. Across the board, homes under $400,000 are still appealing to buyers, but only if they're either move-in ready or priced strategically to account for the age, size, and updates that are needed. This price band remains the most sensitive to interest rates. In the mid-tier, roughly $400,000 to $800,000, buyers want value. They want something that feels like a retreat, not a project. Updated kitchens, newer roofs, level access, the right neighborhoods still move quickly. Anything dated or priced too aggressively is sitting. We're also seeing buyers analyze rental potential much more deeply now. If the numbers make sense, they act. If they don't, let's zoom out and look at the big picture. Median prices across most Big Bear areas held relatively stable in November, though still trending lower year over year. Inventory hasn't dropped meaningfully yet, but some seasonal pullback is starting as we head into the winter. What's interesting is that despite higher inventory, the homes that are selling are doing so because the price matches the reality of the market. Buyers are not chasing homes. They're stepping in only when the value is clear. For sellers, this is not the moment to test the market. This is the moment to price with purpose. Overpricing by even 3 to 5% now will cost you momentum, and you can see that directly reflected in this month's close data. When your home sits longer, buyers assume something is wrong, even if there's nothing wrong. For buyers, this season continues to offer leverage. You have breathing room. You have comps that support negotiation. You can take your time, and as you saw from several closings this month, most accepted offers are coming in under the list price, sometimes meaningfully, sometimes at big gaps. If you've been waiting for an opportunity to buy without competition, November showed that window was still open. Now let's talk about momentum heading into December and January. Historically, we start seeing two types of buyers this year: serious second home purchasers wanting to enjoy the winter season, and investors positioning themselves before spring. That means well-located, well-presented homes do not go unnoticed, even in a slower. We're also watching for the potential of interest rate decreases. If that happens, we are going to expect a wave of pent-up demand to come forward quickly. Sellers who prep now and price correctly will be positioned to take advantage of that upswing. As for luxury, this month confirms something important. The upper tier is not collapsing, it's recalibrating, but the demand is absolutely there. Those $1.3 to $2.2 million sales made that very clear. High quality homes with unique features, strong rental viability, and prestigious neighborhoods still draw confident buyers. Before we wrap up, let me leave you with the bottom line. The Big Bear market in November shows a clear divide. Homes priced honestly and positioned well are selling, and in some cases selling very strong. Homes priced aspirationally are not. Buyers have leverage. Sellers need strategy, and the luxury market, despite everything, remains healthy when the product is exceptional. If you are a seller thinking about making a move in early 2026, the time to prepare is right now. If you're a buyer looking for opportunity, this season is still giving you room to negotiate and secure a better deal. What buyers are looking for or which neighborhoods are giving the best return, I am here for that conversation. Thanks for watching this month's update, and I'll see you in the next report. Talk to you soon. Bye.